Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. In our executive summary today, we cover top stories on Bitcoin's competition with Treasuries, the return of Celsius funds, Circle's funding breakout, booming ETF approval odds, and major regulatory shifts in mining and licensing. Hunter Horsley of Bitwise argues that Bitcoin's primary rival is not gold, but US Treasuries due to their embedded political ties. He says Bitcoin's global sentiment-driven liquidity makes it a practical store of value. Mainstream adoption remains slow as institutional allocators juggle a crowded landscape. This perspective reframes Bitcoin versus bonds rather than the old metal comparison. In bankruptcy news, former Celsius chief Alex Mashinsky and related entities have given up all claims to remaining assets. That frees more than $2.5 billion for distribution to over 250,000 creditors. He was sentenced to 12 years for fraud, and the court will oversee repayments while he serves time. Venture capital in crypto jumped past $1.5 billion in June, more than double May's total thanks largely to Circle's initial public offering. Circle raised close to $1.1 billion, valuing it near $7 billion on launch day. Seaport Global then initiated a buy rating on Circle, pushing its stock up by double digits. Coinbase also gained as the Senate advanced the Genius Act for a federal stablecoin framework. Bloomberg analysts Eric Balchunas and James Seifert now peg the chance of altcoin spot ETFs at 90% or higher. That includes Solana, XRP, Dogecoin, and Cardano funds. The SEC has requested amended filings on in-kind redemptions and staking processes, signaling a constructive review process ahead of anticipated approvals in coming weeks. Bitcoin briefly dipped to a monthly low around $102,000 amid geopolitical jitters, triggering nearly $500 million in liquidations. Ethereum held near $2,400. Federal Reserve Governor Christopher Waller called for a possible rate cut in July to shore up growth before labor markets weaken. Standard Chartered forecasts a surge in tokenized real-world assets beyond stablecoins over 5 years. The RWA tokenization report says private credit and structured debt on-chain could expand rapidly once regulatory clarity emerges. Tokenized assets could transform illiquid markets with faster settlement and around-the-clock trading. Norway plans a temporary ban on new crypto mining centres to free up hydropower for community projects, despite local firms like Aker ASA expanding Bitcoin holdings. Meanwhile, Coinbase secured its MiCA approval in Luxembourg and will operate across all 27 EU states from a new headquarters. Public companies keep adding Bitcoin to treasuries. Nakamoto Holdings raised over $50 million in a PIPE deal to fund corporate Bitcoin purchases. Startups also raised capital for safer vaults. Former SpaceX senior mission manager John Rising secured $4.2 million for his StackUp platform, focusing on secure on-chain operations. In other news, TikTok denied illegal purchase of $300 million in Trump meme coins by a Chinese tech group amid a political spat. Pump Fund delayed its token auction to mid-July as legal challenges mount. The whole ride feels like discovering a secret warp pipe in Super Mario World, guiding you to a new level of innovation in crypto. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready. This podcast is automated by artificial intelligence and is for information purposes only. Nothing stated constitutes legal, tax, investment, or financial advice.